Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, April 15th. It's around 4:30 New York time. So this is going to be a holiday shortened week here in the US with markets closed on Friday for the Good Friday holiday. But tomorrow we'll be getting retail sales. We're looking for a 1.3% month over month increase, up from 0.2%. X autos, we're looking for a 0.3% increase. That would be in line with last month. And while the control group's expected to rise by 0.6%. On Thursday, we'll be getting our usual initial jobless claims, housing start numbers, and the Philly Fed. Not really much going on here in the U.S. between on an economic front standpoint. Obviously, there's a lot of news flow, though, coming out of the Trump administration regarding tariffs, and so we have to always be on alert for that. When we take a look at what we've been seeing in the market, we'll start off with the euro. Certainly the euro has had a very big move. We've seen a little bit of sideways consolidation the last couple of days. It has certainly broken out. It has managed to make a very large breakout, actually rising above all of these previous highs around 112. And we even got as high as 114.80, which was a high that really goes back to January of 22. So certainly the euro's had a very big move, RSI over 70, although that's coming back down. Also right back into the Bollinger Band at this point. So right now what I would be watching for on the euro is support to hold at this 112 area. Clearly that's a major region, and if it were to break and we were to see the euro come down below 112, that could obviously result in a retest and a move back down to 109. However, given the strength we've been seeing in it, I have a feeling we're likely to see it continue to move higher once this period of consolidation wears off and we see the RSI maybe just come back down a little bit further. When we look at the pound, it's a very similar look as well. Here you can see the pound has managed to break above a key level of resistance right around 132. And so really that sets up the potential here for the pound to go all the way back to 134, which was the highs we saw in September. Clearly there's a lot more room it can go from there, but this would obviously be a big starting point. The pound isn't quite as overbought as the euro is. You can see it hasn't really gotten above 70 yet on the RSI. Bollinger Band still suggests that that momentum is strong, although we are outside of it a little bit. More immediately, it looks like maybe there would be some resistance around this 132.5 region. And more importantly, it seems like there's potential for the pound to really continue to move higher. When we swing over to the yen has also seen some really big movements. You can see volume obviously very high. Here you can see the yen basically hasn't really gotten too oversold. Currently trading inside the lower Bollinger Band with the RSI only at 32. So it would almost suggest that the yen could continue to strengthen further. We've also managed to move below this 143.35 region, and this would also suggest that maybe we could continue to see the yen strengthen and move down to this maybe even all the way back to this 140.5 area. You can already see it's tested this region in here a couple of times around 142. And it looks like there's probably room for it to continue to strengthen to around 140.60 or so. Gold has continued to see a very strong run. It is, again, seeing a little bit of a bearish divergence, meaning that lower highs, while price continues to make higher highs. It's not really, you really can't say at this point that gold is really overbought. It actually looks like it can probably continue to move just a little bit higher. In fact, if you just draw a trend line out across these tops, it would maybe suggest you could see gold potentially get somewhere to around 3,300 or so, which is probably another $70 to $80 upside. And that would at least take us back to the upper end of this trend line. It would probably also move us above the upper Bollinger Band, and it would probably also suggest that the RSI comes above 70, and that would probably be a region where you would see some consolidation. Oil obviously has fallen sharply since it fell below this support level at 66. We had highlighted that level and how important it was for a long time, noting that until that level broke, we had to consider that oil would move higher. Well, the level broke on the 3rd, and we've seen it certainly move down to around 58.70, which was one of the areas we had identified. If this level breaks around 58.5 for some reason, then the next area I would be looking for probably comes around 53. Clearly the RSI and momentum indicators that I thought were turning higher have not turned higher, and it looks like, if anything, they're probably now steadily still in a downtrend. And again, this would kind of indicate that momentum for oil has shifted lower, and a break of this 58.5 region sets up that move to 53. Meanwhile, I think upside is limited. Just like this was a strong level of support at 66, this area at 66 is now going to become probably a very difficult level of resistance for oil to get through. When we look at the DAX, it finally has really seen that big breakdown that we were expecting. It managed to come all the way down to this 18,700 region, and that's where it managed to at least find a little bit of a bounce at this point. Again, here we are kind of moving back up towards this area, and here at 21,500, this was an area we had identified a couple of times now as an important area, just because you can see how this was a region where we were kind of hanging around for a couple of about a week or two. When we broke down below it, we clearly just continued to drop, and now this region probably serves as a meaningful level of resistance. It is worth pointing out that the 20-day moving average is also coming down, suggesting this area around 21,500 is likely to be a very strong level of resistance for the DAX going forward. And it could even suggest that if we were to retest this region, it may actually result in the DAX moving lower again. Also, when we look at the DAX, we can clearly see that momentum is very negative. Looking at the RSI, in fact, the RSI is in a big downtrend here, and this would also suggest that maybe momentum in the DAX continues to move lower. Right now, it's hard to identify really any sort of trend lines in the DAX, except for maybe the ones that formed off the top, and even that's kind of iffy at this point. So right now, this looks more like consolidation to me than anything else. When we look at the FTSE, that's also managed to rebound some. Here you can clearly see the momentum was negative. We got that big break below this support area at 8,400. That's resulted in a drop all the way back down to 7,600. This was obviously a big level that was important for a very long time in the FTSE. So now we're seeing a pretty sharp snap back. Again, this looks like more of a consolidation period of time. We're right now at around the 50% retracement level. It's possible we could go all the way up to 8,400 or so. But again, this overall doesn't look very healthy to me, with momentum clearly showing downside. You can see the 20-day moving average also coming down. So I would think that we're probably likely to find some resistance in the FTSE between where we are currently and 8,400, with the risk of another turn lower coming. When we look at the NASDAQ, it's a very similar sort of look. You know, here was our big down move. We had our flag pattern. We broke lower, basically got to, and now basically we've retraced almost to the 50% retracement level. But again, when we look at where the NASDAQ is, it really did reach pretty oversold conditions with it below 30 and below the Bollinger Band. So we did get that move back into that Bollinger Band. You can see we came right up to the 20-day moving average, and at least for now, that's where we stopped. This is also the 10-day exponential moving average. So we've only been above it now for 3 days. And so if this is, if we're still in a downward movement, I would expect that we would move below the 10-day exponential moving average by either tomorrow or the day after tomorrow, really, if we're still in a downtrend, because you can see right now we're stuck between the 10-day and the 20-day moving averages. When we look at the S&P, also very similar. We were really oversold here last week. We've managed to come back and see a big rebound in the market. But right now, at least, here's a little bit of an uptrend that formed in the S&P, and at least as of right now, that uptrend has broken. Again, like the NASDAQ, we've only been above the 10-day exponential moving average for about a day or two, and it looks like the 20-day has been kind of also serving as a little bit of resistance. And also, like the NASDAQ, we've only managed to retrace about 50% of the losses. So right now, this continues to look like, the other indices as well, suggesting that maybe the declines aren't completely over, and we're likely to see another leg coming down, because as you can see, this is a very impulsive move down, and this is a very overlapping move up. And typically impulsive moves are sort of the trend, and the overlapping moves are the corrective waves. And that would indicate to me that we're likely to see a move back down towards this 5150 region. When we look at the Dow, it's also a very similar sort of look, with very impulsive move down, kind of overlapping on the way up. You can see here's a 20-day simple moving average. Here's your 10-day exponential moving average, just really above it for about 3 days now. So obviously, if again, like the Nasdaq and the S&P, if this is some sort of change in trend, we should really see the Dow really just continue to move higher. But unfortunately, I don't really think that's going to be the case, just because, again, this all looks very corrective in nature to me, and that would suggest that we're likely to see another leg lower coming before this is all said and done. Anyway, hope you have a great rest of your week. Have a happy Easter, and we'll see you next week. Bye.